So first of all, I'd like to start off with a bit of material that comes from Credit Suisse, who have done some studies in this area. And what you can see there is a trend over a 10-year period against an index of 100, comparing global industrial production against process automation and factory automation growth. So the light blue bar graph there is global industrial production. We can see that against an index of 100 in 2002, with a dip in 2009, which affected almost every industry, has gone up somewhere around 40% increase over that 10 years. But if we look at the trends in the dark blue and the light blue lines for process and factory automation, we can see that the trend outstrips the growth of global production by quite some way. And in fact, up to 2008, the peak before the financial crisis, where there's about 25% growth in industrial production, was something like a 50 to 70% growth across factory automation and process automation. So as a basket of products, both hardware and software, that fit into there, we can see that the trend was very much outstripping global production trends. And despite the downturn in 2009, the bounce back again has been quite significant as well. We look at the difference between those two markets, and really factory automation is the discrete processing of items, and process is the continuous processing of things like oil, gas, water, etc. A different profile actually when it came to the downturn. We can see that in 2008 the factory automation started to slide in the very early part of the economic downturn, and in 2009 took a 20% drop, so very quick into the recession. But you can see there in 2010 very quickly back out again, with an almost immediate reversal of the trend to come back to where it was before, with some continued growth post-recession. Process automation is a slightly different story in that 2008 it held up its continued trend of about 10% growth, a smaller 5% slide into the downturn, but continued into the next year, so a more prolonged, slower in and slower out profile. And the reason for that predominantly really is that factory automation is much easier to switch off projects, much easier to use it as discretionary spend, much easier for distributors to destock, much easier for basically the purchasing decision to be put on hold, whereas process automations tend to be much bigger projects, longer timescales that can't be just switched off at a moment's notice, or in large projects like power stations and water processing plants that once you've started you've really got to stop, go all the way to the end of that project. We look at the split of where those markets go into. So on the left-hand side, you've got the total basket of automation, but that's split into the factory automation and process automation. We can see on the factory automation side of things, that 72 billion global amount. The majority of that is in automotive. Over a third of factory automation is in the automotive sector. Another about 20% is in packaging, and then textiles and food processing behind that. If we look at process automation, quite different markets. Power, about 19%, oil and gas, 17%, and pharma, the big one, I can't even read my own writing there, 29%, so you can probably see that better than I can. So quite different markets apart from the food processing, which is covered in both. And that's why we see those different profiles and trends. Just give a global perspective also from IMS research. The global manufacturing recovery for this year, 2013, is predicted to be about 6.2% growth, and that's in contrast to 2012, where it was about 3.7% growth. Still growth, but the prediction is that 2013 will be a much better year than 2012. Big indicators in such things like machinery orders and manufacturing activity, and really manufacturing growth in China, Europe and the US are the key drivers behind that growth. One of the things they note in their study, it's quite interesting, is a trend towards European-based, or typically European-based manufacturers starting to make more mid-level products aimed at the lower cost markets, whereas actually China and Asia Pacific are moving more into the higher value goods aimed at other markets. So, if you like, a crossover perhaps of expectations of the past. So that was the global perspective. I just wanted to move now into the Asia Pacific economic region. Another IMS report here, which is saying that almost half of the global investment in industrial automation products was from the Asia Pacific region. So very, very large share of the global market. The power industry within that represents about a fifth of the total spend. So you can see that that's one area of growth. When you get a growth market, there's obviously power is needed behind that, whether it's industrial power or domestic power. And the prediction is that the demand in China and the Asian economies will continue with a positive trend and grow above average rates compared to the rest of the world. What they're saying is that although there's perhaps been some quite bumper years in the past as well, that growth is now predicted to be above average but steady, and rather than be perhaps more volatile or susceptible to outside factors, that's a trend that will be growing year on year rather than moving up and down. So really placing China within all of that, you do see headlines about growth slowing down and whether China is or isn't slowing down in terms of growth. But I think what we can see is that the global trend from the beginning was that automation is growing at a much faster rate than the general economy and industrial production rates, and that's as true for China as anywhere else. And slowing down in growth is not reducing necessarily in size. It's growing, but just at a slower pace. And I think that's quite an important point to get across in terms of slowing down doesn't necessarily mean that you're not going actually really quite fast compared to everybody else. A couple more pieces of information that come from global automation research. The Chinese process instrumentation and automation market for the 10-year period that I showed at the beginning here, 2003 to 2013, the prediction is that the growth will go from $2.7 billion to $6.4 billion. So that's about 140% growth, which far outstrips what we saw in terms of the global trend. That's a compound annual growth rate of over 9%. So in terms of positioning China within the global, we can see it's clearly above the average and outstripping the growth across the globe when it's averaged out. We look at the shares here. On the left-hand side, we've got 2003, and on the right-hand side, 2013. So the US in that period has dropped 3%. Japan in that period has dropped 3% of the global share, and China has increased 4%. So we can again see where the trends are in terms of where the growth is coming from within the global market. One of the measures we try and use within automation is robot density. It's not the entirety of automation by any stretch of the imagination, but it is one of the figures that we can point to say how well is automation being implemented in a region. This report from Credit Suisse looks at robot density across the US and China and compares the two. So we can see that China has 7 times more people employed than the US does for exactly pretty much the same output levels, and therefore the US has 7.5% more output per head, and we can correlate that to something like robot density, where the US has almost 20 times more robots per person than China does. Now, China has an awful lot of people, so in terms of robots per head, you've got to put a lot of robots in, and perhaps in the past that hasn't necessarily been the case. But what we can say is that there's a great deal of potential there for growth to catch up with the similar robot densities we might see in other parts of the world. The US isn't the highest by any stretch of the imagination. We have Japan, Korea and Germany are all higher than the US. In fact, Japan probably twice as many robots per head as the US. Just to put it into perspective, the UK has about 60. If we look at the trends, though, within that, that's just a static snapshot, but the trends for 2010, you can see that China is actually the largest number of shipments of robots globally. 20% of the number of robots shipped in the world went into China, followed by Korea and Germany, which were two of the ones I named as the highest levels of robot density, and the US. Interestingly, India, Brazil and Russia, we often talk about the BRICS as a sort of a grouping of companies in terms of economies, countries in terms of economies, but really they're not even on the map for robots. And I think that's a big differentiator of China from the other three countries within that BRIC region. Automation and robotics are not being taken up at the same rate by any stretch of the imagination. I think the 20% value of China there is also something that's predicted to be quite sustained growth. It's not a bumper year and then there's no more robots going to be shipped. It's a part of a growing, increasing trend. That was really quite a sort of a quick run through, partially to try and catch some time up today, but also to really just give an overview, which I think positions China within the rest of the world. And I think the summary we would interpret from that is that China is definitely a very rapidly growing market for automation. This is the point at which to get in. It's on its way up, and it's a good time, if you like, but not to leave it too long, because the speed at which it's on its way up means that getting in now is the key point.